Level 1. The teller. The structuring worked. Every deposit was under $10,000. Not one triggered a currency transaction report. On the narrow measure the depositor was actually optimizing for, it worked for 15 months. That was never the part that failed. A currency transaction report is filed when more than $10,000 in cash crosses a counter in a day. It is not an accusation, it is a receipt the country keeps. Stay under it and no report is generated, which is why staying under it is the oldest idea in this business. Between October 2011 and January 2013, a California doctor moved about $478,000 in cash into 4 separate accounts. Prosecutors charged 29 counts. On each one, the same pattern. Deposits into more than one account on the same day, sometimes within minutes of each other, which requires no computer at all. It requires a car. 4 accounts means 4 counters, and 4 people who watch a man count cash twice in an afternoon. At level 1, nobody is investigating anything. The teller is not an analyst. She has a queue behind him and a drawer to balance. She sees one transaction and one face, and she has no idea what happened at the branch across town 40 minutes ago. But she writes it down, not because she suspects him, because that is the job. Date, amount, account, name. Nothing was reported. Everything was remembered, and the branch keeps remembering, regardless of how carefully every slip was kept under $10,000. That is the shallowest look anyone will take at this money. One person, one window, one afternoon. There is a level 2 because she cannot see the other 3 accounts. Somebody upstairs can. This is a documentary account of adjudicated cases and the methods used to detect them. It is not instruction. Level 2. The compliance analyst. Same bank, same money, a completely different field of view. Reading an account instead of a deposit changes the picture entirely, because one cash deposit is not evidence of anything, and 11 in a row is a shape. She is not at the window. She has the whole relationship on a screen, every deposit that customer ever made, in order, dated. Individually, all of it is legal. Cash is legal. $9,000 is legal. The sequence is the problem. A sequence is not visible from the counter, which brings us to the most instructive object in this case. Not a wire, not a raid, a letter. In 2007, years before the deposits that were eventually charged, his bank wrote to him. In the Justice Department's words, the jury learned that he received a letter from Wachovia Bank informing him of the reporting requirement and alerting him that his pattern of currency deposits at the time appeared to be violating federal law, the bank told him, in writing. In 2007. In 2016, a federal jury in Los Angeles was handed that letter. 9 years. The account was gone. The deposits were gone. The paperwork outlived all of it. And it came back not as background, but as the thing that proved he knew. Because the account remembers every deposit in order, regardless of how ordinary any one of them looked on the day. Level 2 is a bank looking at its own customer. A good look, and one that stops exactly at the edge of the bank. Nobody there could see what he did at any other bank. Nobody at any bank can. For that, the report has to leave the building. Level 3. The Financial Intelligence Unit. Every one of those reports goes to the same place, in the United States, FinCEN. Filing into a national database instead of a bank's own file changes the math completely, because the unit is not looking at a customer. It is looking at a name across every institution that ever filed on it. No single report catches anyone. That is not what a report is for. The value is aggregate. Thousands of institutions filing independently, and a pattern appearing across them that no one bank could assemble. Which is exactly what happened to a company called Liberty Reserve, a digital currency service registered in Costa Rica. From outside it looked like plumbing, an account, a balance, a transfer. 5.5 million user accounts worldwide, and something on the order of 78 million transactions. Nobody could see it whole. Not one bank, not one regulator, not one country. What existed instead was fragments, each one filed by an institution that had noticed something it could not explain and done the only thing it could: write it down and send it on. Finson's own account is unusually plain about what those fragments were worth once they sat in one place. Dozens of reports, filed by more than 20 different financial institutions, describing what the agency called staggering amounts of funds transfers, helping complete the puzzle for investigators. More than 20 institutions, none of them talking to each other, all of them filing into the same room. In June 2013, FinCEN named Liberty Reserve a financial institution of primary money laundering concern, the first time that authority was ever used against a virtual currency provider. Its founder pleaded guilty and was sentenced to 20 years, admitting he laundered between $250 and $550 million. That is the first genuinely national look in this video. It sees one name in 20 places at once, the same way the analyst saw one customer in 11 deposits, with the walls of the bank taken away. And the country keeps that record regardless of whether any single institution understood what it was looking at. One thing it cannot do: it is blind to anything nobody filed on. A map assembled entirely out of what regulated institutions chose to report, which raises the obvious question: what about money that never touches a regulated institution at all? Level 4, the blockchain analyst. In August 2016, an exchange called Bitfinex was hacked. 119,754 Bitcoin left it, across more than 2,000 unauthorized transactions. Then nothing. The money sat, and moved, and sat again. Moving value onto a public blockchain instead of through a bank changes the math completely, and not in the direction most people assume. A wire from 2011 sits in a bank's archive for as long as the retention schedule says, and not a day longer. A transfer on a public chain is simply there, permanently, readable by anyone. The trail does not erode, it accumulates. Investigators followed a peel chain. Value moved through a long sequence of hops with a little taken off at each one, designed to make the path expensive to follow. It works up to a point. The point where it stopped is in the government's own statement of facts. The withdrawals merge together as they flow through the peel chain and ultimately fund a deposit in February 2017 into an account opened 2 years earlier in Ilya Lichtenstein's own name. Verified, the filing notes, with photographs of his California driver's license and a selfie. There is a quieter detail in the same filing. Investigators identified 8 accounts opened under false names and listed what tied them together. Similar email addresses at one provider, the same IP addresses, created around the time of the hack, and the last marker, all of them abandoned immediately, the moment the exchange asked for identification. 8 accounts walking away from the same question on the same day. Nobody wrote that pattern down. The ledger recorded it, because the ledger records everything. One correction, because it is usually told wrong. The chain produced the identities. It did not recover the money. The Justice Department attributes the recovery of more than 94,000 Bitcoin, valued at over $3.6 billion at seizure, to a file decrypted from cloud storage holding a list of addresses and their private keys. 2 things doing 2 jobs. The ledger said who, the file said where. Lichtenstein pleaded guilty and was sentenced in November 2024 to 60 months. The ledger remembers forever, regardless of how many hops sit between the theft and the balance. What it cannot do is name the person holding the keys. That took an account with a driver's license attached. So the chain, for all its permanence, is waiting on a human mistake. The next level does not wait. Level 5, the Federal Task Force. Everything so far is a record, a slip, an account, a database, a ledger. Records are patient and completely indifferent. They will not explain themselves, and they will not say what a transfer was for. Having subpoena power and people instead of only documents changes the math completely, because a task force can do the one thing no archive can: It can ask somebody, and occasionally somebody answers. In May 2015, the world learned the United States had indicted a group of senior international football officials on racketeering and money laundering charges, arrests in a Zurich hotel, apparently out of nowhere. It was not out of nowhere. On the 25th of November 2013, 18 months before any of that was public, Charles Blazer, formerly of CONCACAF and FIFA's executive committee, had pleaded guilty, under seal, to a 10-count information including racketeering conspiracy, wire fraud conspiracy, money laundering conspiracy, tax evasion, and failing to file a foreign bank account report. For a year and a half, while the organization carried on as normal, the government had a participant. When it reached trial, the Justice Department listed what the jury was shown: witness testimony, contemporaneously kept ledgers, bank records, emails and texts, and consensual recordings. The department has never said who made those recordings, and neither will I. The plea is documented. The recordings are documented. Two facts, side by side. Jose Maria Marin was convicted in December 2017 on racketeering conspiracy and 2 counts of money laundering conspiracy, 4 years, and forfeiture of $3,335,000. Juan Angel Napaut, 9 years. A third defendant, Manuel Berga, was acquitted. That belongs in the record too. The point is not the sport. Every level below this reads something written down without meaning to help anyone. This level recruits an author, and a person remembers, regardless of what the paperwork shows, because a person can be asked what it meant. There is a hard boundary, though. Subpoenas stop at the border, so do warrants. A task force with every power the United States can grant it still cannot walk into another country and take somebody. Level 6, the border. Needing another government to act changes the math completely, because at this altitude a case can be finished, evidence gathered, charges filed, everything proved, and still not move at all. Manuel Chang was the finance minister of Mozambique. Between 2013 and 2016, roughly $2 billion in loans were arranged for Mozambican state-owned companies on projects including a tuna fishing fleet. Over $200 million of the proceeds was diverted. More than $150 million went to bribes and kickbacks. Chang personally received $7 million. Mozambique missed more than $700 million in payments. The currency collapsed. Donors suspended support. This is one of the few laundering cases where the harm has a whole population attached to it. The United States indicted him, and then it waited. He was arrested in December 2018 in South Africa on a provisional warrant issued at the request of the United States, and there he stayed, while 2 countries argued about where he should go, and the case in New York sat completely ready and completely stationary. He was extradited to the Eastern District of New York in July 2023, 4.5 years, not investigating, not building anything, waiting for another sovereign state to decide whether to answer. He was convicted in August 2024 of conspiracy to commit wire fraud and conspiracy to commit money laundering, and sentenced in January 2025 to 102 months. When the Justice Department thanked the people who made it possible, the list was its own kind of evidence. South Africa's Department of Justice, the South African Police Service, authorities in the United Kingdom, Switzerland, Spain, and Portugal. 6 jurisdictions to convict 1 man. None of them could be ordered. Every one had to agree. The treaty remembers, regardless of how long the answer takes. It just does not promise one. So what actually connects them? Not sophistication. The doctor used a car and 4 accounts. The Bitfinex Launderers used a peel chain across 2,000 transactions. Both are on this list. Not size either. $478,000 sits on the same ladder as $2 billion. What connects them is that in every case, the money had to touch something that remembers. A branch remembers a face and a slip. An account remembers every deposit in order. A country remembers every filing from every institution together. A ledger remembers forever and does not forget on request. A person remembers, and a person can decide to tell. A treaty remembers, and another state decides when to answer. 6 kinds of memory. The launderer has to get past all of them, every time, for years. An investigator has to reach one. And now the part that should sit slightly badly, because it sits badly with me. Every case in this video is a case that failed. That is the only reason there is a court document to read from. The ones that worked have no press release, no docket number, no sentencing date, nothing to look up, and nothing to count. So when anyone quotes a figure for how much laundered money gets caught, understand what is being measured, not how good detection is. How good detection is at catching the people who were bad at this. The failures are documented, the successes are silent. That asymmetry is the real shape of this business, and no ladder climbs out of it. 6 levels, 6 kinds of memory, and 1 requirement that never changes. To be worth anything, the money has to come back into the daylight and be spent, which means it has to touch something. Case closed. Follow the money.